All right, everyone. Let's take a look at a question that I recently received from one of the mentorship students that I have. She asks, hello, can you explain the difference between these orders? The limit order, the MIT order, the stop with the limit, the stop. So I will do a quick video to explain how these orders are used, how they're impacting the way we trade, and which orders are best to trade with. All right, let's take a look at how these orders are used, what type of order you should be using for the purpose that you're trying to accomplish. If you're buying the market, if you're using this as a stop loss, if you're entering and exiting for a specific reason. So I'm going to explain to you the reason to use a limit, a market if touched, a stop with a limit, and why and how you should be using it. What you're seeing here is the Trade Scalper for today, December 18th, 2019. These are the signals that everyone gets on their charts. And if you look at where the current price is trading, here is the Superdome, and here is where the price is live at the moment. If I wanted to place an order to buy the market, I want to be a buyer, I want to go long, I would have to do it in one of two ways. I would either buy the market below where it's currently trading, which means that the market has to come back and retrace to that price. So it has to go down. If I wanted to, let's say, buy the market here, it has to come down and retrace down to that price. When that happens, you could only use a limit or a MIT. Limit is a limit order saying I want this exact price or better. An MIT works in the same way. It acts as a limit order where it has to come down and retrace down to it if you're going to be a buyer. But as soon as the market touches that price, what an MIT does is converts that order into a market order. So it's considered market if touched. So the idea behind using a limit order is that you don't have any slippage. You're saying, I want, for example, this exact
Order
price
submitted.
or better. So when it comes down and touches this price, I want that specific price or a better price. If I instead used a market if touched,
Order submitted.
as soon as it touches 3,200 and a quarter, it converts itself into a market order. Both orders have to work in the same way. They
Order
both
canceled.
have to come down to the market in order to be filled as a buyer. So a limit order or a market if touched order can only be placed below where the current price is trading. And the same thing is true. If I was going to be a seller, there was a sell signal right here for the trade scalper. If I was going to be a seller, I would use a limit order,
Order submitted.
which is
Order canceled. Order submitted.
here, anything above where the current market is trading in order to retrace back up to it. What I'm saying is I want this specific price or a better price or nothing. If I can't get this price, don't fill me. If I instead wanted to use a market if touched
Order
order,
submitted.
which would look like this,
Order submitted.
in green here, MIT, this would mean I want to get filled as soon as it touches that price, convert it into a market order. Both work in the same way. It has to move up and retrace back up to these orders to be filled. One gives you no slippage. The other, you could have slippage. It could actually be a tick better in your favor. It could be the exact price. Here I have 32.02 quarter, or it could be a better price or a tick of slippage. So you have a little bit more variation of what could happen once it touches this MIT because it converts into a market order.
Order
A
canceled.
limit order instead is this price or nothing. Now the way that I
Order
am
canceled.
able to choose between the two, besides going here into the properties of the Superdome, is I hold down the control key and left click. So if I hold down the control key,
Order submitted.
it gives me a limit order. If I left
Order
click,
submitted.
it's a limit order. If I hold down the control key, it's a limit order.
Order canceled. Order canceled. Order submitted. Order submitted.
And that's a market if touch. So remember, it's always
Order canceled.
putting the market
Order
into the
canceled.
retracement to go long or to go short. Now, if we look at a stop order is a little bit different because a stop order actually tells us that we are trying to buy or sell as the market moves in the same direction, and it's called buying on a stop or selling a stop. So if I was to place an order to go long as the market is trying to move higher, I cannot use a limit order because as soon as I use a limit or a market if touched, the reaction of the charting platform of the way this works is going to say, well, he's trying to get 3202 and there's a better price currently being traded, so you automatically get filled at this price when using a limit order or a market if touched above as a buyer. So you cannot use a limit order or a market if touched above where the price is currently trading. You have to use a stop. So the idea behind a stop order
Order submitted.
is saying I want to go long once the market is moving in the same direction and filling me as it continues higher. Now, a stop order converts into a market order, and you usually think about a stop order as a protective stop, right? Where you don't want to lose money, but it's just an order. It doesn't matter if it's getting into the market or getting out of the market. You're using this stop order to get into the market for the first time as a buyer. To protect yourself, you would have a stop as a seller here to get out of the market once you're filled. So let me explain to you
Order
a little bit
canceled.
further. I want to buy at 3,200 right here. In order to buy at 3,200, if I use a limit order, it's going to say, well, it's trading at a better price, so fill them at the better price. If I use a market if touched, it's trading at a better price, fill them at 3,250. In order to buy above the market, I have to use a stop or a stop with a limit. A stop
Order
order
submitted.
is the middle mouse button. A stop with a limit is this. It's telling me that I want to buy at this price once the market moves up to it, meaning going in the same direction, but I want no slippage, or I want one tick of slippage, or I want two tick of slippage, or I want no slippage here. When I click this check mark, it doesn't mean the number of contracts. It means the number of ticks of slippage that you'll allow before you get filled. So if I click this at 0,
Order submitted.
what I'm saying is once it touches this price, 3201.75, I want this price with no slippage. If I use a stop order,
Order canceled.
as soon as it touches this price, it converts and says buy at market. So you can have a tick of slippage, you can have the exact price, you can have a better price, possibly. Don't count on it. So a stop order converts into a market, a stop with a limit.
Order filled.
Oops.
Order canceled.
A stop with a limit will
Order
say
canceled.
how many ticks of slippage will you want to give up to get filled? If you say 1, that means it could be anywhere between 3202.50 and 3202.75. In between these two prices, you'll be filled, but nothing more than that. If I click 0, what you're saying is I want this price or nothing. Don't fill me long if I can't get this price. And the same thing is true here on the short side. If you want to sell, let me just close this out.
Order
If you
filled.
want to sell the market as it's moving down, meaning you're trying to jump on board the momentum in the same direction, you can't use a limit or a market because it's not retracing up to it. You're trying to get filled as the market is moving down in the same direction. So you have to use a
Order
stop order
submitted.
or you have to use a stop with a limit. And again, the stop with a limit says once it touches this price, how many ticks of slippage will you allow before you get filled. If you say 0, you want this price or nothing. If you say 1 tick of slippage, you'll get between 31.97.75 and 31.98, and within these two you should get filled. So that's what a stop with a limit. You're limiting the amount of slippage once it touches that price. If it touches the stop order, it says enter short on a stop. It'll convert into a market order and you're filled short. As soon as it touches, it could be a good price, bad price, but it converts into a market. So if I was to do this without using the ATM strategy here, and I say,
Order canceled.
I want to go short as the market is going down, maybe a tick or two from where it is, I would come here to the short side and I would say, I have
Order
my option.
submitted.
Once it touches this price, I'm going to be filled at market. Or I have the option to say a stop with a limit with however many ticks of slippage I am willing to give up in order to get filled. So once I get filled here, I'll just make the fill here. And as soon as it touches that price, as it comes down,
Order filled.
so it touched the price and I got a fill, you can see 3,200 short because it touched it, converted into a market. Now, if I was going to now manage this trade with targets and stops, remember, I'm short. I sold the market. I want to see the market go down so I can be successful and be profitable. But if it goes against me and I'm losing money, that means I have to buy it back. So I'm going to buy it back at a loss. So as the market goes up here, it's a loss and I have to use
Order
a stop
submitted.
order or I have to use a stop with a limit. So as I'm losing money and the market is going against me, I'm going to get out of this trade on a stop. It's the same order. It's a stop to enter short, and it's a stop to get me out. I'm just using the orders for different reasons. One is to enter, and one is to exit at a loss. Now, the same thing is true if I was
Order
to
filled.
enter on a limit order. If I wanted to enter this trade, for example, long, I wanted to buy it on a
Order
limit
submitted.
or a market if touched. So it has to retrace back down to me so I can be filled here long at 3,200. So
Order filled.
now I'm filled here at 3,200 because it retraced down to it. It's going in a retracement to get me filled. And now to protect myself, I want to exit the market if it goes against me. So if I bought it, that means I have to sell it. And so now as the market goes down, I have to buy it back at a loss, or I have to acquire it back at a loss. So I have to get rid of it at a loss. So this here would be
Order submitted.
my stop loss. I purchased it at this price as it retraced down to it. If it goes against me, I'm exiting the trade on a stop. It's the same type of order, a stop order to enter, a stop order to exit, or I could use the stop with a limit. Same thing. Once it hits my stop with a limit, I want this price or nothing. And my target, since now I want to see the market go up and be successful so I can make some money, it's going to be a retracement up, right? So I'm going to sell it with a
Order
limit
submitted.
or a
Order submitted.
market if touched order or a limit order here. So as the market goes up, it's retracing up to sell it, just like it retraced down to buy it. If the market is going down, it's going in the same direction. I'm selling it as it moves in the same direction to protect myself from losing any more money. Or I'm selling it at a profit as it retraces up and I'm selling it as it goes up. Hopefully that'll help you with understanding market if touched, limits, and a stop with a limit. Stop with a limit is not really used quite that often because once you want to get out of a trade because it's losing money or you want to get into a trade, you usually use a stop order. A market if touched order is also good to enter, especially with scalping and exiting.
Order
Very
filled.
important when exiting the market because as soon as you realize that your profit has been made, you want to get out of there and you want to take your profit and run. You may get the exact price. You may get a tick of slippage, especially the E-mini S&P has healthy volatility and healthy liquidity. Some markets that work slower, you may get more slippage, which is not good. But market of touched orders are good to get in and to get out without having to worry about the limit order trying to get filled because you're in line in a queue. My name is John Paul. If you have any questions, visit DayTradeToWin.com and I'll see you soon.